Welcome everybody. Today we're talking about Bill Ackman and Pershing Square Capital Management. His tennis skills might be basic, but his investment skills are superior. He started Pershing Square Capital with $54 million in New York City, and he's grown it up to $20 billion in AUM. His stock portfolio alone is $12 billion, which we're examining today. In this video, I'm going to talk about his huge new bet that takes up the largest position in his portfolio, another controlling stake, which is becoming a theme in his investment strategy that he took in a company last quarter, and 70% of his portfolio concentrated in this one industry. There's a lot of telling themes about the year ahead, and I'm excited to get into it. Let's jump right in. $2.2 billion in Uber. That is by miles the biggest bet in Ackman's portfolio. So here's what happened. In Q4, Uber missed their earnings guidelines and the stock tanked. Ackman, being a fundamental investor, noticed that Uber is not a ride-hailing company anymore. It is a 360 mobility solutions provider. Not just cabs, delivery, freight, and soon an aggregator of autonomous vehicles. He looked at the financials. Revenue was up 15%. Free cash flow was up 105%. EBITDA up 35%. Margins expanding. 180 million users around the globe. Lots of moats in this business, and he was all in. And if you look at the Uber stock, he was bang on the money. In the last 3 months, the stock is up 30%, but since January, it's up 50%. Great timing, great spot. Just a masterclass in his ability to pick opportunities. So well done, Bill Ackman. Now, he wasn't alone. There were 395 other funds that initiated positions in Q1 and also won big, but there were 173 losers that exited their positions and are probably pretty upset about their portfolios right now. Now, there were 951 funds that were holding Uber even through the crash. They slightly increased their exposure and also benefited from the upward momentum. But overall, it seems like Uber is a clear winner in the mobility space and a good future-focused bet. Ackman's next move was the Brookfield Corporation. He invested $320 million and now holds 45% of the company. The Brookfield Corporation is an alternative asset manager with $1 trillion in assets under management. They're in renewable energy, infrastructure, private credit, private equity. They also own a whole bunch of real estate. But other than the strong track record of the management, the predictable cash flows, the fundamentals of the businesses they own, it was interesting in terms of the scale that he invested and the timing, because a lot of these projects are set to benefit greatly in a rate cut environment. So it's telling of what's to come. Let's keep an eye out. Google is the only other tech stock outside Uber that Pershing Square Capital owns. Now, Google is valued slightly lower than companies like Microsoft and Nvidia because it's perceived that they're getting beaten in the AI race. But in reality, they boast $70 billion in free cash flow. Their return on invested capital is 34%. They're a very low debt business. And the recent rollout of AI overviews is gaining back their share in search, showing high user numbers. Also, they acquired Wiz, probably one of the most interesting cybersecurity companies. And that is going to be a new avenue for growth, especially in an AI world. So Ackman saw this as a good opportunity and invested in Google as its second pick in tech. The other investment he made was in Hertz. Why Hertz, you're wondering? Well, his $9 million got him to become the second largest shareholder in the company. Now, Ackman loves a good corporate turnaround. 6 months ago, Hertz announced that it was buying 100,000 Tesla vehicles. Around that time, Tesla announced that it was dropping the price of Teslas, which led to a massive loss on the balance sheet because the resale value of those cars had dropped. Now, they also totally overestimated the demand for these vehicles in their fleet, and that led to a further sell-off and a further loss. Ackman came in at a point that he thought the company was greatly undervalued given the demand for the service. So he came in and he did his thing where he reshuffled the capital structure, reshuffled the operations, and made it a business with good unit economics and predictable demand. He also noticed that other players in the space weren't expanding as aggressively, and Hertz had a stronghold in the niche that they play in. Also, the tariffs are beneficial for Hertz, given that it's increasing the price of used and new cars. All in all, given the price that he came in and what it's trading at now, Ackman has seen a massive uplift in his stake, and it seems like a great bet for the portfolio. Another surprising move last quarter was his exit from Nike. Now, he's been a long-time shareholder, he's benefited from the stock, but he's completely exited his position. Now, he cites that their pivot from wholesale partners to direct to consumer is a mistake, and that is going to cost them. Sales are down about 9% year on year, and he attributes it to that fact, and he sees a higher return for the risk elsewhere, which is why he exited the position and probably went so big on Uber. Okay, so in summary, Ackman is heavily invested in the consumer discretionary space, about 30% of his portfolio, and specifically in food. He owns Chipotle, Burger King, Popeyes, Firehouse Subs, Tim Hortons, some of the biggest brands in the space. Outside of that, he's exposed to real estate through the Howard Hughes Group and also through Brookfield Corporation, as well as other alternative assets. Now, his outsized bet was in Uber in the tech space. Let's see how that plays out. If you enjoyed this video, next up, I'm doing BlackRock, the largest asset manager in the world, about $11.5 trillion worth of assets. They have 200,000 people around the world in 100 different countries. They're invested in every single business you can think of. Tune in if you want a breakdown of their stock portfolio.